How crypto investors can save big on taxes in Puerto Rico. The boom of Bitcoin throughout the 2010s has shown how lucrative it can be to invest in crypto. Although the price tends to fluctuate wildly, a single Bitcoin is consistently worth thousands of US dollars. The downside to being a crypto investor is the taxes you have to pay on your capital gains. But if you're a US crypto investor, there's a way to save big on your capital gains taxes. Moving to Puerto Rico under the Act 60 Investor Resident Individual Tax Incentive. Before jumping on the next flight to Puerto Rico, crypto investors should have a solid grasp on how the United States taxes cryptocurrency capital gains. Any gains earned on crypto assets are considered capital gains by the IRS and are taxed accordingly. As long as you're a U.S. citizen or resident, you owe taxes to the United States regardless of where you live and work. Essentially, there's no way to escape your U.S. tax burden other than renouncing your U.S. citizenship. Puerto Rico and the other U.S. territories are the sole exceptions, as they are U.S. territories but not states. This makes Puerto Rico the ideal tax haven for crypto investors looking to keep more of their own money. Since 2012, thousands of U.S. investors, crypto and otherwise, have settled on this beautiful Caribbean island to soak up the sun while enjoying massive tax savings under the Act 60 Investor Resident Individual Tax Incentive, which offers a 0% tax rate on capital gains. In other words, you can cash out your capital gains on dividends, interest, and crypto assets, whether long or short term, without paying any taxes. There are, however, certain conditions that an Act 60 Investor Resident Individual Decree holder must satisfy to be eligible for the generous tax savings. Most importantly, they must establish themselves as a bona fide resident of Puerto Rico, which essentially means they must truly commit to a life on the island. Decree holders also need to make 2 donations of $5,000 to approved Puerto Rico nonprofits each year and file an annual report to maintain compliance with the decree regulations. A crypto investor can't simply move to Puerto Rico and cash out the years of capital gains they've earned on their investments while living in the United States. Capital gains eligible for Act 60 tax savings are exclusively those earned while the decree holder is a bona fide resident of Puerto Rico. Cashing out gains earned as a U.S. resident will subject an investor to regular U.S. capital gains taxes. If you're moving to Puerto Rico under the Act 60 Investor Resident Individual Tax Incentive with unrealized crypto gains, you have 2 options to avoid paying U.S. capital gains taxes when you realize your gains. The first is selling your crypto assets and then immediately buying them back as a bona fide Puerto Rican resident. The downside, of course, is that you'll still have to pay regular U.S. capital gains taxes on the gains you realized upon selling. The other option is to continue holding your crypto assets until you've been a Puerto Rican resident for at least 10 years. Once you hit the 10-year mark, the gains earned before you move to Puerto Rico will be taxed at a mere 5%, which is significantly lower than the 15 or 20% you might have otherwise owed the IRS. Relocating your whole life to Puerto Rico can be quite an ordeal, but the island offers a rich lifestyle with gorgeous beaches and year-round summer weather. Puerto Ricans are friendly, and the culture is vibrant and exciting. Of course, the most enticing part of the move is the massive tax savings crypto investors can enjoy. No capital gains taxes on crypto gains is the dream of any crypto investor.